A hearty welcome to all the students of CA Foundation, CMA as well. This is CA MS Swaminathan from Sai CA Coaching Center. Students, today the objective of this session, which is going to be very brief and short, is essentially based on one fact that I have noticed out of my teaching experience. Many students are not very comfortable with errors, rectification of errors, and specifically in this chapter with a particular type of error known as errors of principle, okay, which is what you will be able to see in your study material as I am displaying on the screen in front of you. So you have these errors of principle, and there is a paragraph given in your study material explaining it. So we are just going to briefly discuss errors of principle to help you understand it better so that you don't make any mistakes with regard to errors of principle in your foundation examinations. Now, if one were to read just the first sentence of errors of principle, it states that when a transaction is recorded in contravention of accounting principles, the key terminology that you should understand is accounting principles, meaning something that has been recorded in the books of accounts against accounting principles. Okay, and that is basically an error of principle. Now, let us just take a step back and go and check in our study material what are the various accounting principles that we have learned. In your unit 2 of chapter 1, you would have learned the basic concepts and principles, and there we observe that there is this beautiful kind of a chart given in your study material where it talks about concepts, principles, and conventions. And here we notice a list of various concepts highlighted. Now, I am actually just going to pick up a few, maybe two or three different concepts and explain to you how does an error of principle arise in the case of such kind of concepts. Okay. Now let us, for example, pick up the very first one, the entity concept. Now we all know that entity concept, which is explained in your study material over here, means that the owner and the business transactions must be kept separate. Correct? You should not mix the personal transaction of the owner with the business transactions. Now, let me give you an example. Suppose you happen to be the proprietor of an organization, okay, and you are doing trading, for example, in vegetables, and you have a very good business. Now, suppose you are going to gift your mother with some jewelry, which is costing you 1 lakh rupees. Now, this 1 lakh rupees worth of gift is being given not for business purposes, is being given for personal purposes to your mother, let's say on her birthday. Therefore, even though your business is doing very well and you have a lot of cash in your business, it does not mean that you will actually book your personal expenses in the business account. Well, you may very well use the business cash to meet your personal expenses. If you do that, you should debit the drawings account of the proprietor. For example, in this case, if this jewelry costs the business 1 lakh and the business has issued the check to the jewelry shop owner, your entry properly must be drawings account debit 1 lakh to bank account 1 lakh. This should be the journal entry. If you pass this entry or record this entry, you will not be violating the entity concept. Why? Because the jewelry was purchased as a personal gift. Now, instead of recording this entry, if you were to record it as follows, okay, let us say miscellaneous expenses debit 1 lakh to bank account 1 lakh. Now, this entry makes it clear that it looks like a business expenditure, which is actually not the case. So, by recording the original entry as miscellaneous expense to bank, your double entry is completed. So, your journal entry balances, your trial balance will balance. Therefore, you will not be able to identify this error because the trial balance is also balancing perfectly. It's very difficult to identify errors of principle essentially because it will not throw the trial balance out of order, meaning the trial balance will be balancing in the case of errors of principle. So it's very tough to identify something like probably your compensating errors in terms of the toughness to identify. So we have seen one example for error of principle relating to entity concept, okay, which is recorded in contravention of accounting principle. Now let me give you one more example. Let us say we move on with the accrual concept, okay. Now what does this accrual concept state? It states basically that any expense that the business has incurred during a particular accounting year must be accounted for. Okay, it must be accrued for. Similarly, any income which is due to the business, meaning you have a right to receive the money, then you accrue for it. Okay, in your books. Now, let us, for example, take an expenditure. Suppose your business actually has entered into a contract with a particular counterparty for whatever be it. Suppose the contract amount was for 1 lakh and the contract stipulated that you are supposed to deliver the product in 1 week's time. And if you do not deliver it for valid reasons, okay, you are not able to deliver it for valid reasons, then it is okay. But invalid reasons, then you are supposed to pay, let us say, a compensation to the counterparty to the extent of 5,000 rupees. Okay, I repeat, the contract states that the value of the deal is 1 lakh rupees. You are supposed to deliver a product within 1 week's time. If you do not deliver it in 1 week's time for invalid reasons, then you are supposed to pay a compensation for the delay worth rupees 5,000 to the counterparty. Okay, let us assume the counterparty is Mr. A. Now, assuming that you have not been able to deliver the product within a week's time due to your fault, then obviously, as per the contract, you are supposed to pay or you are liable for the extra 5,000. Therefore, you must account for this 5,000 rupees by recording a journal entry based on accrual concept. You can debit whatever expense, maybe let us say it is a miscellaneous expense, okay, or penalty expense, you debit and you say payable account on 31st of March if it is payable in the start of the next financial year. So on 31st of March, you must record an entry that is there is an expense worth 5,000 which is payable by me. Why is it so? Because the contract is very clear that you have to pay 5,000 if you have delayed delivery of the product within a week's or rather beyond a week's time. Okay. Now, if you have recorded that entry of some expense being debited and crediting the payable account, then you have not violated the accrual concept or the accounting principle. But if you failed to record that entry, in other words, if you have not recorded that entry, then you are violating one of the basic accounting principles, which is the accrual concept. Now, when you have failed to record, again it becomes very difficult to identify this. Okay, so errors of principle are very tough basically to identify. Now, let us move on from here to another example. Okay, possibly if we can see, and that is going to be your, let me show you on the screen. Here it is. Let's say matching concept. This is one another accounting principle. And let's take a classic example which relates to fixed assets. Okay. Now, when you when you acquire a fixed asset, let's say you have acquired a car, okay, by paying 10 lakh rupees, now for business purposes. Now this car which you have acquired by paying 10 lakhs for business purposes is a fixed asset of yours, so you are expecting to use it maybe over the next 5 years probably. Okay, which means what? The benefit that that particular fixed asset in the form of the car is expected to give you is expected to last with you for at least 5 years, correct? It is not that the car is going to be used within 1 year and then it becomes useless. It is expected to be with you for 5 years serving your business purposes. Therefore, how will it be fair to book the entire 10 lakh rupees as an expenditure in this year, in the very first year of acquisition, as a revenue expenditure? It's not fair. Why? Because the benefit of that particular expenditure is expected to flow to you over more than one accounting years. So we know the difference between capital expenditure and revenue expenditure. We must capitalize this particular expenditure of 10 lakhs, and starting from this year, over the next 5 years, meaning including this year for 5 years, we will basically charge depreciation each year by debiting our profit loss account. Why? Because we are able to logically understand that every year, if we are following straight line method of depreciation and assuming that scrap value is zero, 2 lakh rupees worth of that particular car is being used for business purposes to generate revenue in each of those 5 years. Therefore, since the car is helping the business earn a revenue each year over the next 5 years, the revenue will be credited to the P&L of the trading every year, the statement of income. Corresponding to that income, the related expenditure in the form of depreciation must also be recorded, which is what is matching concept. Okay, so if you are actually not going to debit depreciation every year, but going to charge the entire thing as as a revenue expenditure in the very first year of acquisition, then you are basically committing an error of principle by not differentiating between capital expenditure and revenue expenditure, and also the fact that you are not adopting the matching concept. Okay, I guess we have discussed quite a few concepts. Okay, now, well, let me take for your benefit one more example. Let us say conservatism concept as appearing on the screen. Now, dear students, we all know that conservatism concept is largely applicable essentially in the case of valuation of inventories or closing stock. We all know that closing stock is valued at either cost price or the net realizable value, whichever is lower as per the accounting standards. Correct? Now, suppose in the business in which you are, you have acquired stock which is lying with you in your godown worth, let us say, 1 lakh rupees at cost price. On 31st of March, you are having stock lying with you which you have acquired at a cost price of 1 lakh. Now, if you can sell this stock at more than 1 lakh, then we know that the net realizable value is higher than 1 lakh. Let's assume you can sell it for 1 lakh and 20,000 rupees. Then, based on the accounting standard, we will not value closing stock at 1 lakh and 20,000 in the balance sheet. We will only value it at cost price, which is lower than the net realizable value. Therefore, we must value it only at 1 lakh. Correct? Now, suppose you have actually valued it at 1 lakh and 20,000, then the double entry is completed. The trial balance will not be out of, if you are passed an entry also for it, the trial balance will not be out. Your balance sheet will balance. But still, there is a fundamental error in terms of conservatism concept. Okay. Now, similarly, take the other case. Suppose that particular stock can be sold by you after the year end only for 92,000 rupees and not even for 1 lakh rupees, which is its cost price. Then we know that this particular stock must be presented in your financial statements only at 92,000 rupees and not at 1 lakh, because the net realizable value in this case happens to be lower than the cost price. Again, we are applying the conservatism concept. Now, in this case, assume that instead of recording it at 92,000, if you were to record it at 1 lakh, then again your balance sheet, your financials will balance. But can one tell that this financial statement is error free? Certainly not. There is an error. What type of error? An error of principle. Relating to which principle or concept? Conservatism concept in this example. Okay. I guess we have discussed about 3 to 4 different concepts, and I hope and I strongly believe that students will be very clear now in terms of understanding what exactly is an error of principle. Okay, as I said at the start, the objective of this session was supposed to be kept very brief only because I wanted to clarify errors of principle, because many a time students find it difficult to differentiate and understand what exactly is an error of principle. With that, this is CAMS Swaminathan signing off. In case you have any queries, students, you can feel free to reach me at 9444 642613. Thanks. Bye.